Welcome to South Beach Accounting. My name is Jason Miller. I'm a CPA active in the state of Florida. And today I'm going to go over some simple income tax tips for basically anyone that just works a regular standard job and just wants to understand a little bit more about the refund process and how everything is calculated. Okay, so the first thing we need to understand is how the IRS processes your refund. And this is the main word that I want you to focus on. This is an actual refund. It is not extra money that the government is paying you. It means that they withheld more tax throughout the year than what you actually owed. So if you paid more through the year than you owe in tax, you may get money back. So that's basically what we're focusing on here. This is a refund. It is not extra money. And just because you get a large amount of money when you file your tax return, it's not free money. It's a refund of money that you already paid. And you are collecting 0% interest. If you really want to put your money away and have a large amount in April, then put it in a savings account. You could give it to me. I'll save it. I'll pay you 1% on all of your money throughout the year and give it back to you in April when you file your tax return. It just doesn't make sense to let the government hold your money for 0% interest. So what we want to do is minimize our refunds so that we have larger paychecks throughout the year. And that's what we're going to focus on today. So the first thing to understand is this is your 1040. It's the individual income tax return for 2024. Seen it, you probably already did your 2024 return, and whatever you picked here, single, married, found jointly, had a household, this is where you put your total amount from form W-2, so whatever you collected from your employer, and you put it right here. Subtract line, this is your taxable income. Okay, and if we roll through here, it goes tax, this is your total tax. Okay, so line 24 is going to be your total tax, and then federal income tax withheld from form W-2. Okay, so if you just had a regular job, which is what this video is mainly for, I'm going to go into more complicated tax matters in later videos, but this is just for someone that works for an employer, collects a W-2 at the end of the year, and then uses that to file their tax return. So these are the main things we're looking for. Line 24, your total tax. Line 25, federal income tax withheld. Amount of line 34, you want refunded to you. So this was your refund on 35A. Okay? If line 33 is more than line 24, subtract line 24, this is the amount you overpaid. That's how it all works. You overpaid money, and now you're getting a refund. You're giving money to the government with no benefit to yourself. So you might as well have a larger check throughout the year, and even if you owe the government a small amount of money, it's still better than getting a refund, because a refund is nothing. It's just a refund. It's like, hey, I'm gonna let you hold $2,000 and you're not gonna give me anything for it. It doesn't make any sense in any way, shape, or form. You can go to the bank, put that $2,000 in there, and they'll give you interest. You can put the $2,000 in the stock market, and maybe you can make more money, but then you have a risk of gambling there. Whatever the case may be, it's your money, so you might as well keep it. Now, the one thing we do want to worry about, and you're like, hey, Jason, why don't I just not pay any tax throughout the year? Because you could be hit with underpayment penalties. Okay, so this right here, underpayment of estimated tax by individuals. So if you don't pay any tax throughout the year, you could be hit with additional penalties. So what you want to try to do to avoid the penalty is, it says it right here on the IRS website, and I'll put a link to this in the description to the video. You can avoid the underpayment of estimated tax by individuals if you filed your tax return shows less than $1,000. So if you just work like one little side job, like while you're in school, while you're in college, and your taxes owed was like less than $1,000, then you don't even have to worry about the underpayment penalty. What we're looking at is somebody who worked a full-time job all year. So what you want to do is pay at least 90% of the tax shown on the return. So if you go back to the 1040, total tax, line 24, you want to pay at least 90% of this number for your current year, okay? Or 100% tax shown on the return for the prior year, all right? So if we're looking at the 2024 return, which that's what this one is right here, then if we pay line 24 in tax, we're good. So if you don't have any massive life-changing events and the tax law hasn't changed significantly, then paying what you paid last year on line 24 is going to be kind of your best bet for the year. All right. Now, if you make more than 150,000, you probably already have your own CPA. So we're gonna let those people figure that stuff out for themselves. All right. So now, how do we do this? This is a form W-4, okay? Employees Withholding Certificate. Everybody fills it out when they start a new job. But what a lot of people don't understand is that you can fill this out multiple times throughout the year. It actually doesn't matter. This is how you can adjust your tax payments. So you put your first name, your last name, address, city, single, married, found, joint, head of household, and then your social, okay? And what we want to do is right here, claim dependent and other credits, okay? So if your total income will be 200,000 or less, multiply number of qualifying children under age 17 by 2,000. Put that there, and then you're going to put an amount right here in number 3, and then that's going to help the payroll company calculate how much withholdings you should have throughout the year. Now, for example, I'm single with no kids. I usually put 3 right here. So I end up putting 3 qualifying children times 2,000, so it withholds $6,000. And it's because I'm going to have extra deductions and I don't want to overpay tax. I'd rather owe the government a little bit of money than actually have some massive refund. Because the massive refund, and I'm going to reiterate this, is 0% interest. It is not giving you any benefit. It's your money. Keep it. Use it. Do something better with it. And then what happens if we need to see throughout the year kind of where we are? Okay, so how do we match line 24 to what we're actually seeing on our W-4? If you go into your pay stub for the most recent pay stub, now this is just a basic one I found on the internet, but it says your taxes right here, current 3581, gross earnings was 600, current, and then YTD means year to date. So in this example, it's the exact same, but that's only going to happen like right here. It says pay date January 6th, pay period January 1st, January 7th. So this is only for the first week. Once you're in like June, your year to date is going to be much larger. But you can look at it and see kind of and track your progress throughout the year and then go back to your W-4 and make the changes you need to make sure that you're withholding the correct amount to tie to line 24. What I generally do is I start off in January and I'll put sometimes I'll put 4 children to really withhold tons of money, and then I'll check it in June and kind of see how I am on track for line 24, and then maybe have to do this to 2 and then check again in October. So I'll usually go half the year collecting as much as my paycheck as I can, and then I'll do a quarter where I'm collecting a little bit less, and then for that final quarter of the year, October, November, December, then I'm collecting about almost exactly what I should be so that I'm tying to line 24. Now, one of the biggest questions I get about changing your W-4, is this all legal? Yes, because basically all you're doing is telling your payroll tax company, whether it be ADP or Paychecks, or if your employer just does it. I worked at McDonald's when I was in high school, and McDonald's just had their own payroll processor. You're just telling whoever your company's payroll processor is to withhold that amount of money from your check. This isn't even something that they're filing with the government. They do not file Form W-4 with the government. The payroll processor takes it and then makes adjustments to how much income tax is withheld from your paycheck every cycle so that you have collected the correct amount of tax throughout the year. If we scroll down to the bottom of the W-4, there's tax tables down here, which these can be useful if you really, let's say you change jobs and now you're going to be making significantly more money. you can kind of figure out a higher paying job and how much tax you're actually going to be paying. Now, these can be kind of complicated to read. So let's say we're single, we make $60,000 a year and no children. So you would go $60,000 here, and then annual taxable wage and salary. So you're going to look over around here. So 60,000 to 60,000, you're going to be making approximately 89.30. All right, that's about what you're going to owe in taxes for the year. These tables can be very complicated, especially if you have a lot of other like refunds or credits. So I don't necessarily recommend them. I generally just recommend using whatever you line 24 from your 2024 return. This was your total tax, and if you pay 100% of that, you're always good. If you're going to make less money this year, then pay a smaller percentage of that. So the final thing we'll touch on is down here, the W-4 form on the second page, way above the tax table. There's also a tax estimator. So if you go to this website right here, and then it brings up this right here, who can use this tool, don't use this tool if you have non-resident, alien status, blah, 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 blah. This is just for your standard people. Use the tax withholding estimator. So I don't necessarily recommend this one because it can be very difficult. The first is pretty easy. You're like, okay, we're single. Do you have a job? Yes. Are you blind, over 65, claim anyone's dependent? We're going to say no. But this is where it can get kind of crazy. Now you're like, well, net self-employment income, investment income. So these are people with just much more complicated tax returns. And that's not really who this video is for. This video is to try to keep your tax as low as possible throughout the year and make sure your paycheck is larger. If you have any questions, please leave me a comment. I'll respond to all comments in a very timely fashion. I appreciate your attention, and I hope to save you some money, and follow for more videos that are going to save you tax money, which is the whole goal of this video. Thanks for watching. My name is Jason Miller. I'm a CPA and owner of South Beach Accounting.